Some people feel we dodged a bullet today. Initially, when our government took out 3 Iranian nuclear enrichment facilities, Wall Street, of course, panicked. The price of oil surged, which is what you expect whenever things get unstable in the Middle East. But then Iran retaliated by shooting some conventional missiles at a U.S. base in Qatar, and they were even warned to minimize casualties. It was crazy. Sure seems like they don't have the cards, and they know it. In response, the price of oil then plummeted. So could the worst be behind us, or are there more complications we need to consider now that we're a whole lot closer to a war with Iran? Some people feel. I'm not so sure. To answer these questions, we need to check in with the best energy expert out there, Rusty Braziel. He's the founder and executive chairman of RBN Energy. Rusty, welcome back to Mad Money.
Well, good to be back with you, Jim.
All right, so Rusty, you have taught me so much over the years, and one thing you've taught me is this whole discussion, Straits of Hormuz, 20% go through it, just think about what the U.S. has done. Stop being like the conventional thinkers who believe that we are all hostage to this one little strait. Could you please just demystify the whole thing that I heard all for the last 72 hours?
Well, Jim, Iran has been talking about closing down the Straits of Hormuz for 20 years or more, every time there's a big conflict like this. And they've never done it. And the reason why is they've got 1.7 million barrels a day of exports that goes straight through the Straits of Hormuz. So if they end up cutting it off, they're going to end up cutting off themselves. So it's pretty unlikely that that happens unless things get a lot more dire than they seem to be right now. And I think the reason why you saw crude oil prices come back down $5 this afternoon or during the day today is simply because the market has concluded that it's simply not going to be as much of a problem as they thought.
Rusty, I would think also that 1.7 million that they would block themselves. I think that the U.S. would pick up some share if that occurred, right?
Well, if 1.7 million barrels a day was all of a sudden out of the market, then the price of oil is going way up. That's obviously going to impact what's happening in the United States. And that just means that barrels that are exported out of the United States become that much more valuable. So, you know, there's some positive sides to it if you want to look at it that way.
Are we stuck at 13.5 million, or do you think that there is some underutilized capacity if we get all the different mechanisms to export, from pipeline to very large crude carriers that we could have right in piers right next to our country?
Well, I wouldn't say stuck at 13.5. We've actually have our forecast going up a few 100,000 barrels after that, but it's pretty much topped out. And in the next few years, say 2032 or 33, we're probably headed back down, but very slowly. Effectively, right now, we are flat, and it's going to stay flat for as far as we can see.
All right, so let's talk about today. We got some real wild action today, and it made me feel like, once again, that the oil futures market may not correctly, accurately reflect what's happening. You know, you have these giant swings, Rusty. It is a little unrealistic, isn't it?
No, Jim, it's like any other market. It's just like markets were equities. There was a news event. Everybody jumped in on the news event, and as soon as the market got in there, the smart money looked at it and said, look, every single time there has been some sort of war, saber rattling, that sort of thing, as soon as the event happens, the price simply drops. So that's happened ever since the 2003 George Bush Iraq invasion. Price dropped $10 as soon as that invasion happened. And if you look at the majority of times, every time there has been an event like this, the price has gone down, not up.
Wow.
So that's the market already has basically priced in the uncertainty in the market. And as soon as the uncertainty dials down a few notches, then the price drops down, and that's what happened today.
Okay, I find that personally very bullish for stocks. Now, we are having a hard time with the Chinese. They would love nothing more than the best of the best, the NVIDIA AI chips. We, on the other hand, feel like we've got something that we can give them, but we can block, which is ethane. Now, the problem here is that we're not willing to give them the chips. They have rare earth minerals that they could hold back. Rusty, rare earth minerals versus ethane. Make some sense of this for me, please.
Well, rare earth minerals are a lot bigger deal than ethane is. ethane is a very significant deal for the petrochemical industry and for the companies that are exporting ethane. So I don't mean to minimize the situation, but right now it's being used, ethane is being used as a bargaining chip in this magnet rare earth debate that's going on right now between the U.S. and China. And as it stands right now, it has not been resolved. So the problem that we have is that ethane exports, and we produce about 500,000 barrels a day, or export about 500,000 barrels a day, and about half of that goes to China. And right now, all exports of ethane are prohibited by the Department of Commerce, and that is really causing some serious problems for the folks that actually export those barrels.
Well, wait a second. Look, natural gas liquids, I know Gutter's the largest producer, but we're right up there. You're telling me that the Commerce Secretary is basically cutting our nose off despite our face. We've got real companies involved who make ethane, and we're telling them basically what, their ships have to stay in the middle of the Pacific Ocean?
We have to go out there and we have to park those ships, and as soon as we run out of ships to park, we've got a bigger problem on our hands.
Well, but I mean, if I'm Enterprise Product Partners, a very, very good company, or Energy Transfer, a company that does very well, they're the guys who are really going to get hurt. The Chinese aren't going to get hurt.
That is exactly right. So we've been advocating everything that we can in order to get this prohibition removed. And it's worse than that, Jim, because what's happening in the global markets is a lot of customers for U.S. exports are looking at what's happening to ethane and saying, look, you guys have basically taken ethane and make it a bargaining chip in this entire debate. You could do that with any of your energy products. We don't know if we want to buy energy exports from the United States or not. In effect, we've weaponized ethane. The market knows it, and that means that the market is no longer looking at the U.S. exporters of energy commodities as a trustworthy supplier.
I will tell you,
that's bad.
I would tell you no one's making that point except for you. I've not heard that argued before. I think it's outrageous. If it doesn't do any good, why should our great American companies be hurt? It's not doing anything. Thank you for bringing that to attention. And thank you for all along telling me, listen, the whole 20% Straits of Hormuz, that is not the way you should look at it, because I heard that all weekend. And I'm tired of getting the misdirection, because otherwise you'd be buying oil today and you just got crushed.
We got crushed. That's right. So we're right back to exactly where we were on oil prices before Israel ever did the first attack a week and a few days ago.
That is incredible. Well, I knew that you always bring it to me straight. Other people, you got to listen to this, man, because you heard a lot of misinformation over the last 72 hours. I am telling you that. That's Rusty Braziel. He's the founder, executive chairman of RBN Energy, something I start my day with every day because he does his bulletins. But this one was like at 5:55 or 6:05. I love them when you do them the earlier the better. 6:05. Thank you, Rusty. Good to talk to you.
All right. Thanks, Jim.
Mad Money's back after the break.
Coming up, could unlimited breadsticks lead to unlimited returns? Cramer's taking a closer look at a restaurant stock. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.